For those investors joining the show today looking for a Tesla rant, you're out of here. No Triple D today, taking a well deserved vacation, the trading machine that he is. Chips, ASML, sinks the market, takes other chips with it. We got to cover that. The old pre earnings release during the day trick. We got other earnings, UAL, Morgan Stanley, Interactive Brokers. Jay McCanless, 835 from Wedbush Securities, and we got a special guest host on PreMarket Prep.
Welcome to Benzinga's PreMarket Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, good morning, traders and investors. We're starting the day out a little bit in the green after yesterday's sell-off. We'll talk technically about the S&P here in just a few minutes. We're up 5.5 handles, 58.68 and a quarter. The buck flat over 103 at 103.06. TLT creeping up 48 cents, 95.37. Crude trying to stabilize at $70, down 31 cents at 70.27. Gold in the green, up nearly $17, trying to break into $2,700 area. It did briefly. Silver, that's your leader, up twice as much as gold. That's up 33 cents, 32.09. And Bitcoin keeps climbing, up $925 at 68,145. In the hot seat today, covering for Triple D, is none other than Jim Tassoni from Armor Wealth Strategies. We'll bring him onto the screen along with, AB. How's everyone doing this morning?
I'm good, Joel. I think actually between, you and Dennis, you guys actually miss more shows than me. The difference is you guys have excused absences. Mine are inexcused. Jim, how are we doing this morning?
We're good. We're good. Thanks, AB. Thanks, Joel. I am excited to fill in, and will try to do my best to fit into the very large shoes of Triple D. We know what a phenomenal trader he is, so I will do my best to fill in for that gargantuan figure that he is.
Yeah, your first job is for filling in for Dennis. Is you got to give us the recap of the Oilers game last night. All right. Sorry.
Go ahead.
Let's bring it to the markets here. Joel's got ASML up on the screen. We got to talk ASML. So this happened yesterday at 10:30 in the morning. An inadvertent earnings leak came from ASML's website. So the company was supposed to report earnings this morning, and those earnings got released midday yesterday, and they were kind of a mixed bag. So ASML said it expects net sales for 2025 to come in between 30 billion and 35 billion euros, and that was on the lower half of the range that it had previously reported. But here was the kicker, was that net bookings for September quarter were 2.6 billion euros, the company said. The expectation was 5.6 billion. So that missed by 3 billion euros on the consensus estimate. And so ASML ended up getting hit like 16% right away. And then it got bought back a little and then kept moving lower. But you can see if you look at a chart of the Qs right at that same time, just absolutely crushed NVIDIA. All the other chips came down with ASML, just wiping out over 50, let me see, what was the final tally? Over $50 billion in market cap for ASML in a single day after this earnings release.
Yeah, and this one stung a little bit for me, guys. This is one of my larger holdings in my long-term portfolio. Everything was going okay. I had this on my radar for earnings this morning. All of a sudden, I look at my long-term portfolio and it's getting hammered. I go into it, I see the early release, and I immediately start looking at the position. Again, like I said, this is a long-term portfolio hold for me, so I am still holding, but I would not be adding down here My level in the short term, if I was swing trading, was around that 786 level, and we sliced right through that without even a second thought. So right now, I'm unfortunately and sadly holding this, but would not look to be adding, but still believe in the long-term story here. Still think it's one of the major players with a huge competitive advantage and a wide moat from a fundamental standpoint. I'm holding on. I think it's a good stock to own for the long term, but short term, if you're a swing trader, if you're a day trader on the long side, this is a no touch for me right now.
And what about a nice pop? Would you, if you got a nice wicked rebound off this, would you be looking, peel it out, or you just kind of just sit and wait mode,
You
both
know,
long term and short term?
yeah, I would probably be looking to trim my trim level originally. Now with this pullback, I'd probably be looking to maybe take a little bit off in that 862 level if we could reclaim that
Oh,
from right before. And I realize that's a huge gap to fill because that's kind of where we were before this thing fell apart. 730 is a level that I could lean on, or you could lean on if you wanted to take a risky long, but I would have a really short leash on it if you're trying to get long at that 730 level. If you see a close below 730 on my charts, I don't have much below that. So again, if you're looking for this in a day trade, a swing trade, things like that, and you're not looking to get short it right now after this downdraft yesterday, I may be willing to lean against that 730 level, but we take
yeah, we're $28 below that right now.
yeah, yeah.
We're so what if you were short? What if you were short?
If I was short here, I would hang on to that short. I think you could, again, I like that 730 level, resistance becomes, or support becomes resistance.
Mm-hmm.
I think you could probably hold a stop there and be short against a 730 level at this point,
Hmm.
watching for that level to hold. If you wanted to initiate a short on a rebound, you could also look at that 730 level as a place to initiate a short with kind of I would need to give it a little bit of a longer leash on that, though. If you want to get short
Yeah.
at 730, you probably have to watch to that 785, 786 level on your stop.
All right, I'm just gonna go to the monthlies on this, and I'm just looking. I'm looking sub 700 right now. And on the monthlies, I see three monthly lows between 679.12 and 696. So I mean, institutions, bigger players, people that are looking, I would look at that 680 to 700 level over the next couple days. See if we can find at least a double bottom in here. I don't have the heart, even if it got back up to 730 to short it. I just my contrarian ways. First things first, the Bulls need to defend. You did get sub 700 at 689.75. So if in fact you can't press up against, breach that level, man, could be some room for a rebound. Briefly, Nvidia, it was just trotting its way to new all-time highs. That gets sacked off the news. It is trading in the green this morning, leaning on yesterday's low. I saw everything. The chips getting hit across the board. Look at it. There's your leader, ASML. One question for you, Jim. Did someone said, do you think that this is the canary in the coal mine for the chip stocks, or you think this is just a one-off?
I think you got to just watch the price action from here. Obviously, we've had a huge run in the chips, and it's a situation where everybody wants to pick the top. And that's, for me, at least in my 20-year trading career, that's always been a dangerous thing to do, to try to pick the top. Now, ASML is in no man's land. You're in jail if you own it. Unfortunately, I'm one of those people. But for the chip sector in general, I think, like you said, I think you can lean on 129, 129.30 in Nvidia if you want to look for a place to initiate a long. We saw the chips again get hammered, but 245 for me on the SMH is another place where we've got a really good line in the sand. where I think you could be long against 245, but a close below 245, and I would be out of that position. And again, if you're more willing to look at shorts, that might be a place where you want to look for at least a short-term short on this momentum.
Yeah, I'm gonna say something groundbreaking here. Not really, but just the if I were to buy any chip stock right now, it still would be Nvidia. I mean, someone who put it in the chat, I think it was Franz, said that Nvidia cannot even produce enough chips. They have so many orders, and it's just like out of all these stocks, there are pockets of weakness. I mean, we saw what happened to SMCI. Obviously, AMD has been a big laggard to Nvidia. Like if I'm buying a chip stock, why not just go with the best of breed and buy Nvidia here? So I'd rather just wait and see how ASML shakes out. But let's move on. We did just get some breaking news before we get back to earnings. Novavax getting absolutely hammered this morning. Shout out to a couple different people in the chat that pointed that out. But Novavax this morning announced, the FDA placed a clinical hold on the company's investigational new drug application for its COVID-19/influenza combination. So Novavax was working on a vaccine that would basically be, instead of getting a flu shot, you would get a flu shot. And it would also be a COVID shot at the same time. So this combination shot, and this trial failed, or the FDA is putting a hold on it. So Novavax is trading down 23% on this. It got actually down a little bit lower and looks like it's popped just in the last few seconds here. Joel, I'll let you give Jim, if you have any comments first, and then we'll go to the technicals here on this breaking news.
Yeah, I think this highlights the difficulty of trading individual biotech stocks. You can wake up to news like this, and it can really ruin your day. So you got to be really careful in these stocks and understand the position and understand the risk involved. When I'm looking at this, I mean, geez, this is tough now. Going back all the way to, August 8th, I think when they reported earnings, we had a low that day of 887. You got kind of that area as maybe as somewhere that you might find some support, but this is a no touch. Very difficult to short after a move like this, but I think for me this would be a no touch after news like this.
Wow. Breaking news to Novavax, COVID vaccines. What year is this? 2024? Getting into 2025? I don't know. COVID flu, maybe. I don't know. Big jump in May, and I think it was off similar news, maybe off this. And I know I was dead wrong on this one because I remember it hit 14 in the pre-market, and I made a big proclamation that it wasn't going to go to 14. Well, it did it that day, but it went beyond 14. It went to almost 23. I think Jim makes a great technical setup here. 861 was a low back in May, and then 887. That's protecting the gap. If you are trading this, look at the news. What happened back on May 10th and see if it was related to this. If not, if it is and it's reversing, then it could just reverse this whole move and fill the gap. But once again, we are not biotech experts, and this is what could happen to a biotech portfolio. And the point, we haven't even looked at the ETFs for the biotechs. IBB, that's still up 48 cents. What's the one for the smaller stocks?
Is it XBI?
Yeah, XBI. I bet you it's yeah. So wow, that's up 67 cents here. So I don't even know.
I know. I wonder if they're just not like if it's not that actively traded in the pre-market
Yeah.
or something. Because I'm surprised that these would still be in
and
the
how
green.
big a position is Novavax in those ETFs too is the other thing that I don't know offhand.
Huh. All right. Well, let's get back to the regularly scheduled program here. We had to cover that breaking news. We'll continue to watch Novavax here to see the reaction. Let's move on here to our PM earnings from yesterday afternoon. United Airlines reported after the close yesterday. I will pull up those numbers here. So United slightly in the green here after the report. The company reported EPS of $3.33. All threes beat the $3.13 estimate. Sales came in at $14.84 billion, beat the $14.78 billion. They see the EPS for Q4 to be from $2.50 to $3, and the estimate was $3.17. That EPS guidance was actually a little bit light, but then the company announced a $1.5 billion share buyback, and the stock kind of popped on that. So mixed bag there on the earnings because they got the double beat, but then the EPS guidance was a little bit light, but then they announced that share buyback, and the stock is trading up 1.5%.
Yeah, this is a position for me I don't currently own. I actually looked at getting long this position, this stock, United, back at 49, and I'm kicking myself for not doing it. It had a breakout on my charts at that level, right around 49, 49.05. Looked at getting long, didn't, because, and again, this is where sometimes psychology and preconceived notions can get in the way. I've never liked airlines. I've never traded them all that well, and I've never found them to be too profitable in my long-term portfolio. Up here, I find it nauseating to get long. I think from a valuation standpoint, it's overvalued. We've had a huge run. If you're long it, congratulations, but initiating a long here, I would think is a difficult proposition.
I have to agree here. Boy, you are back to your pre-COVID high. It's 63.52. You're a buck and a half above that. On the upper right chart, you might see one of the world's worst trend lines that ever was drawn, but I would tighten that up on your chart. I don't know if you even want to draw it off this 41 and change. I would just keep an eye on that trend line as long, if you get a consolidation period here, I don't know where it's going to go, if you're going to keep blasting off, but I'd keep adjusting that trend line, look for some consolidation, and then I would not want to own it. I can't get long enough here. I'm just looking if I did own it or if I wanted to, initiate a short on weakness. You did get a nice pop on the pre-market, as I said. Longer term, if this closed above 63.53, kudos to UAL here. That would be above your March 2020 high. These airlines, they're not sparking recession here. A red bar yesterday for Delta, but still knocking on the $54 level. That is a little bit different. That's not lining up with the COVID levels. Love, you have the activist in there still. Big meeting, I think, trying to get rid of some people. Tomorrow, just a little preview for tomorrow's show. We're going to have good old Frank Holmes on from that runs and the creator
Jets.
of the Jets ET. What timing? Do I time the guest or what? We're going to have Frank Holmes joining us to talk about the airlines. They got to be liking that recent move in oil, right? Dropped $8 off the high. So far, smooth sailing here in the airline stocks.
All right, and then let's get into the brokerage space. We saw that Charles Schwab have a strong day yesterday, kind of set the bar a little high for Interactive Brokers, IBKR, which also reported after the close yesterday. Interactive reported an EPS of $1.75, which missed the estimate by 7 cents. $1.82 is what the street was looking for. Revenue of $1.37 billion, beat by $30 million there. So you had the EPS miss. The revenue was in line. Beats on top line. Customer accounts stand at 3.12 million in Q3. So stock trading down this morning about $4, but it actually got quite a bit lower, Joel. And you talked about the technicals there, but it got bought back up to around 150. So Interactive Brokers, again, the miss on the EPS in line on the sales. So a little bit of a mixed bag, but that bar was set high by Charles Schwab. Interactive trading slightly lower this morning.
Yeah, and I think maybe part of their issue is that they don't have, as Triple D talked about yesterday, they don't have Triple D in there providing his liquidity on their platform today. So that might be part of the week. No, I'm kidding everybody. But in all reality, this stock, another one, if you look at this chart, just a juggernaut to the upside. This thing has been a monster. And here you may have a situation where it's really moved a lot. And if you're if you're a masochist out there and you want to look for an area to try to short, this 149.35 area that we're trading a little bit below here in the pre-market, you could try a short there. If we close above that, you could lean on the that 154 area at 154.75 high as your stop out, looking for a move down to either 141 or 135. That would be, again, a glutton for punishment. You're playing momentum in the face there. Conversely, if you want to look for an area to get long in this stock, I would struggle to get long up here. I would rather look to lean against, somewhere in the 141, 142 area. I think if we get a consolidation or a pullback into there, I think that might be a good place to try to reload.
Hey, Jim, we got a quick note here from Andrew Mari Alonso. If Jim wants to fill in Triple D's shoes, you're going to need a 5-minute rant during this show. So I don't know if you.
The only rant that I could go on right now is not market related. It's Detroit sports related. And I don't think anybody wants to hear that. But after my Tigers and the Hutchinson injury this weekend, I could definitely go on a woe is me Detroit sports rant. But that would probably be about it at this point.
All right. Interactive brokers. I keep looking at this stock and saying, why don't I own it? I don't know if today's own it. I'll just make a couple technical notes here. First of all, AB, you made a great point. Schwab set such a high bar for this one, right? With that move yesterday. Did get a red bar and did fill the gap yesterday. You were warned here on pre-market prep about that gap fill area. So that's what you have in Schwab. For interactive brokers, just note you're way off the pre-market low. So anyone that had those puts or anything below 145, they were trying to lock it in. Pre-market low, 144.85. Do we have anything? No. Do I have anything on the dailies here? Boom. I have a daily low at 145.39. This got a little bit, I call this 145 area. If you're looking to bring in a short from yesterday or have some puts that are in the money, you better take out this 145 area and keep on going. Coming back on the upside, you got to wait. If you're looking to nibble, if you're looking to parcel out, you took it into earnings. You can't be really down much money as it made a new all-time unless you bought it yesterday for the earnings. The bottom of yesterday's range is 152. I think you could see that real quick on a pop up to that area. So interactive, what a move off that August low. So a little bit of a peel back. If you're buying the dip, you may be a little bit early today.
Yeah, and just talking about the brokerages real quick, we do have Robinhood is hosting its Hood event this week. I believe it starts either today or tomorrow. So just in case Robinhood says anything that could be moving these stocks, if they say, oh, trading activity, we expect to be up tenfold over the next 5, whatever it is that Interactive and Schwab could move on some of the things that Hood says potentially. All right, continuing on the earnings, we're going to move to some ones that came in this morning. Let's go to Abbott, which came in right at 7:30 this morning. So Abbott Laboratories reported EPS of $1.21, beat the $1.20 estimate. Sales came in at $10.63 billion against the $10.54 billion estimate. So a slight beat there on EPS and sales for Abbott. The guidance came in strong too. Adjusted EPS, they see Q4 EPS guidance of $1.31 to $1.37. The consensus was $1.20. So you're seeing Abbott actually down on this report despite the double beat and the guidance above estimate. So I wonder what in this report the market doesn't like. Either way, Abbott down slightly, about $1 here this morning.
Yeah, and this is another one that's had, earnings back in July, kind of chopped around there for a few days, and then has had a nice move to the upside along with the rest of the market. We're seeing some, we saw some consolidation. Now we saw a move higher, a little bit of a pullback on this earnings announcement. This is a difficult one for me. I don't own it. I think you could play along here. I look at 114.20 as a place to potentially get long. I would have a short leash, a stop out at like 112.40, a close below that. But that's an area I think if you want to look to play long here, I would definitely be more of someone to look to the long side than trying to initiate a short on this earnings report.
Pretty easy technical setup here for me for Abbott Labs here. You guys know how I like lows, double tops, double bottoms, triple. This 116 area here, until you can establish a firm 116 bid here, I think the path of least resistance is lower here, going all the way down to that 112 area. So we just have a few minutes left here with Jim. But Jim, we don't talk a lot of macro. We don't, well, we try to. We cover different things, but big move in the S&Ps yesterday. Spider correlated with that. I have a few technical thoughts. I just wanted to go here for the remaining few minutes we have you. Go a little bit macro with us before we let you go.
Yeah, absolutely. And I think, again, you mentioned it spot on. Right now, we're in a position where it's been a pretty easy macro trade, right? Get long, forget everything, and make money. That's been the key to this year so far. But we saw a trade yesterday on a shorter term. We saw that pop up to the 585.27 area in SPY, and I'll use SPY. I know, Joel, you and I trade the futures and the SPOOs a little bit too, and I'll let you do a technical take there. But the other thing that I saw that I thought was interesting, and friend of the show, Ryan Dietrich, put out a pretty good chart on X yesterday, and he's great with some of these longer term charts and macro themes. And the bull market in U.S. indices, the S&P 500, just had its 2-year anniversary yesterday. And I know we hear all the time how long in the tooth this rally is and how we're due for a pullback and all these things. And he actually pointed out that the average bull market lasts about 5.5 years. So if you want to believe in the averages, that would mean we would have 3 to 3.5 years left of this rally, which sounds pretty good to me and my portfolios. But with that being said, he also pointed out that year 3 of that 5-year period tends to be the weakest year. So even though we may have some legs left in this bull market, it doesn't mean that it goes up in a straight line. It doesn't mean there can't be some consolidation. And as we pointed out, we hit that 585.27 level and pulled off of it, trading down under 580 right now, or right around 580 in the pre-market, I guess, a little bit above. And so I think that 585 level is key. We need to watch that from a short-term standpoint. You want to watch that. We want to get above that level and close above there to resume the move higher. But I think, again, watching this market and saying, if I'm a short-term trader, there may be some areas here for me to get cute and make some money on consolidations or pullbacks. But from a long-term standpoint, the bull market is still very much intact, especially when you look at the S&P 500 and the Qs for that matter. So I would not be trying to short these markets for any long-term duration. I think you can continue to hold, maybe some consolidation, but overall the bull market is still very much intact.
Yeah, okay, and I'll give you the flip side of that. Potential double top yesterday, 15.50, and I believe 18.25. Did not take out that pre-market high, which was so important. I wish I would have left my stop above the pre-market high on the short. On the downside, we did have that vacuum on that light volume rally that we had on Monday. We just kind of went through that area. But very important, the bulls, and I'm going to give you, just a short-term level. You have an exact double bottom here in the S&Ps at 58.50. That's Monday's low. That's Tuesday's low. Your current low is 53.75. So the bulls need to step up and defend that level. If not, I'm not saying we're going to 5,800 or 5,750, but you have if you're trying to swing trade here, off the bounce, you have an identifiable level of support. If you are more for shorting, it takes out that 58.50. then last week's low is way down at 57 a quarter, 57.25 and a quarter. I don't know if we'll be saying that this week, but Jim, I think I have to give you an A plus here, filling in for Triple D. Jim Tassoni, Armor Wealth Strategies, filling in very well. Thanks for your technical, your fundamental information there, and we'll get you back on again. Oh, TLT trade, real quick. TLT update.
Yep. So the TLT, real quick, I know we talked about that a few weeks ago. It was one of my better trades of the year, actually. And now we're kind of seeing a rebound in this. I got short, as we talked about on the show, up at that 100 spot 30 level. Took most of my trade off down in the 94 level. I've got one quarter of my position left on. I've got to stop at 96. So I'm not going to let this whole thing run back in my face. I think part of the reason, and it's funny again from a contrarian standpoint, when we came on the show and we talked after that first rate cut, we were seeing more rate cuts priced in the Fed funds futures than we are anymore. They've kind of taken some of those off the table. And so in a normalized yield curve, looking at a 1.5% to 2% spread long-term versus Fed funds, now in this 4% range, 4.25%, I think we could hang out here. And that's why I think as funny as it is, we're actually getting kind of a consolidation or a move higher, is because we no longer see Fed funds coming down as much. And so I think, again, it's been a great trade. I don't think it's that the juice is there that it once was. I would be looking, if you're in this trade, if you followed what I did and got into the same position for the same reasons, it's been a great trade. Have that stop at 96. And if it takes out 96, you may actually have a chance to get long in the TLT. So that's my levels right now.
Yeah, what did it expect? Because I know when you talked about it, you were looking at like a long-term trade on this, and then when we were talking about it, when you in between, we're like, oh my gosh, look at this percentage move! This is like a 6-month move. This is a year move. So sometimes your long-term expectations can play out in a much shorter time frame. But, you stuck with it. We'll see. Of course, we got a few things to look at. Some, the election, different things with, the next move by the Fed. But I'm really going to let you go now, Jim. Thanks a lot. We'll be dialing you up again. Jim Tassoni, Armor Wealth Strategies, filling in very well there for Triple D. Thank you very much.
Appreciate it, guys. Thanks.
All right, thank you, Jim. We'll call you soon. All right, we do have our next guest hanging out backstage as well. Before we bring on Jay, let's do Morgan Stanley's earnings real quick. We'll make it snappy, and then we'll bring on our next guest. We got a packed show today, Joel. I kind of like it. We're moving rapid fire here. So Morgan Stanley reported EPS of $1.88. That beat the $1.58 estimate. Sales came in at $15.38 billion, beat the $14.41 billion. So beat by over $1 billion there on sales there. Declares a 92.5-cent dividend. So all in all, I mean, these bank earnings have been very strong across the board. Morgan Stanley, despite the high bar set by some of the other banks, trading higher here by 3.5%. We know Morgan Stanley, too, compared to, a Goldman Sachs or JP Morgan, has more, it's more exposure to like the wealth management division compared to investment banking. So wealth management looks to be doing well here. Total client assets surpass, guess a number, Joel.
$3 trillion.
$7.5 trillion.
Wow. Well, the market's gone up too. I'm going to, it sold off yesterday. I'm just going to make one technical comment on this one if you're trading Morgan Stanley today. And it has nothing to do with levels in Morgan Stanley. Look at that Goldman Sachs chart from yesterday. So, hey, will history repeat itself? I don't know. But, man, if you want to sell into strength, here's your opportunity.
And we've talked about that, just the tendency of some of these bank stocks to do that, go up, and then sell off later. But I teased it. We've got another special guest hanging out backstage. We got Jay McCanless coming on from Wedbush. We're going to talk some home stocks, some home builders, just the overall real estate market. So without further ado, let's give Jay our special pre-market prep welcome and see how he's doing when we come back.
All right, we're joined here by Jay McCanless, Senior VP, Equity Research, covering the home builders and building products sectors, more than 14 years in the business. Jay, how are you doing this morning?
Doing well. Thanks for having me on.
So I spoke to you a little bit less than a year ago, and we were having rising interest rates, and you talked about still the potential strength in the housing market. And in the face of rising interest rates, man, these home stocks continued to move higher. Now you're getting a little retreat. I mean, is there any way that they can perform like they've performed in a rising interest rate environment now with more headwind, with not headwinds, tailwinds with lower rates on the horizon?
Yeah, I think we got bearish like early April on some of these names, which was the right call. We're able to put some sell ratings on and then cover with a couple. Probably should have upgraded some more at that point and gotten a little more positive. But yeah, I think you look at the setup into 25. If mortgage rates, which who knows if this backup we've seen is permanent or not, but assuming this is just a temporary blip off one jobs print, and we're headed back to mortgage rates in the fives, then yeah, I think this group could see some upside as we move into next year. The two names that we have a buy rating on in the home builders are some small cap names. BZH is the ticker there. Also a smaller company called Landsea, LSEA. I think another way that we've been talking to people about playing the group is BLDR. We're buy rated on that one, as well as UFPI, which is, and I think a lot of people have probably heard of BLDR. That's Builders First Source, very large supplier to the public home builders. And then UFPI, decent market cap, 8 billion market cap, but maybe not a household name. UFP Industries sells into a lot of the home retail stores. They also sell to the builders, and then they have a packaging business, but a very clean balance sheet. And this is a name that we upgraded, I want to say 2 weeks ago, and been getting a lot of inbounds ever since on this name.
Okay, so what else? Is this your two primary overweights with these two stocks, or do you have any more that are following into that category?
No, I think on the product side, these are the two outperform rated names. These are the ones we'd focus on. And so the easiest math is if you think that there's going to be more construction in 25 versus 24, whether it's multifamily, single family, et cetera, these stocks should directly benefit from those higher construction levels. And I think also you get for if you believe the R&R trade is going to work in 25, which we thought we were going to see more of that in 24. It didn't really pan out, but I think buy side sentiment right now is pretty positive on R&R expansion in 25 versus 24. UFPI benefits a little bit more from that than BLDR does. So if you have a really nuanced view of what's going to happen with R&R, you might. And if that view is positive, you might lean a little heavier into UFPI. But yeah, on the product side, these are the two names we're focused on right now.
What about the big boys? What about your Lennars and your KB Homes? The stocks that just had tremendous runs, cooling off here just a little bit. Give us your take on those.
Sure. So we're neutral rated on a lot of them. The move that we've seen from July 1 up until now has been pretty impressive for the builders. And we did upgrade Horton and Meritage to neutral from underperform yesterday, just because we have a more positive view, I think, on mortgage rates, especially as we get into the spring season. So didn't want to continue to push that trade when it wasn't working. But I do think we're a little more comfortable with the builders that focus on being land heavy. Names like we're neutrated on all these, but names like a Pulte, names like an LGI, versus some of the names like a Horton or a Lennar, where they want to be more focused on just volume over price. And we don't know that that's necessarily a sustainable strategy for the long term. So we like the builders, and Beazer that we talked about on the small cap side would fit in that way as well. They are a land heavier builder. They can control a little more of their own destiny when it comes to what type of product they're coming out of the ground with, and also being able to react to what's happening from a demand standpoint.
Jay, how's it going? Aaron here with PreMarket Prep here at Benzinga. We're in downtown Detroit. I see on your list of stocks that you cover both Rocket and United Wholesale Mortgage. What do you see going on with these stocks? And like at what point do you expect the mortgage industry to kind of heat up if rates fall, people start getting more mortgages? Do you think these are interesting companies right now or not as much?
Yeah, we're new traded on both those names. So what I would say for mortgage right now is we saw, well, it seems like a pickup in refis, as mortgage rates have come in a little bit. But the thing that we've talked to clients about and written extensively about is if you look at where mortgages are, I think it's like 70% of mortgages in this country have a rate below 5%. So until we see mortgage rates start to move aggressively below 6%, maybe that refi boom that some people were looking for may have seen a little bit of flutter higher in terms of refis, but it's not going to be a refi boom like I think we did see in 20 and 21 and in the front half of 22. But in terms of both companies, yes, we're neutral rated, but I think both of them have a lot of opportunity in front of them. I think especially with Rocket trying to broaden their funnel out and moving into more traditional real estate and some of the other things that they've done. It's I think they're interesting, but for now, feel like we need a little bit lower rates to come in before we can get really excited about those two.
And then just following up on this one, I mean, I know there was some sort of like short report on United Wholesale Mortgage a few months ago from a company called Hunterbrook. Did you follow that story, or did you have any insights into that?
Yeah, I can't really comment on it. I never saw the report.
Okay, I was just
yeah.
curious because I didn't want to go through the whole thing, and I was like, this seems interesting, but I don't really understand this industry that well, so I figured I'd ask you. But all right, I do have another question that's more just kind of like macro overall home builder stuff. So we've heard from a lot of Fed officials that housing is one area where inflation has remained sticky. And they talk about the fact that there's still a shortage of housing in the United States. There's more demand than supply. How do you combat that? Like, how do you encourage builders to build more homes? Because if you just cut interest rates, which makes it easier to build, that's also going to increase the price of homes too. So that doesn't really solve the inflation problem necessarily.
Yep, I agree. And if you think about where we are from a productive capacity, probably about 1.2 to 1.3 million single family starts is about all we can do with where the trades are right now. A couple of the companies that we cover, Cavco and Legacy Homes, they make manufactured housing, which is also, if you're in Detroit, that's a big area for them as well. I would love to see the Fed in conjunction with the executive branch find ways to get more manufactured housing out there, because right now I think my stick builders, they're not at full capacity, but probably pretty close. And I mean, we go through the litany of why we don't have the productive capacity we did 15 years ago. But the net of it is, I think the builders are building at about, call it 90% capacity right now, and could build a little faster. But yeah, I think you're right. There is still a shortage of housing out there. But the other problem, and the builders talk at length about this, is you're seeing a lot of pushback, a lot of NIMBYism, a lot of people saying, I don't want these homes built in my backyard. And in terms of where the home builders can build, it's one of those things where, yeah, you could go a little further out and build the homes out there, but is there going to be the jobs to support them? You're going to be able to get crews out there, things like that. So there's lots of sides to the problem, but I'd say at this point, the home builders are building about as fast as they can. One thing that is going to help as we see multifamily apartments be completed and go to lease up, that's going to free up productive capacity for the single family home building industry. Maybe that helps us, and the macro forecasters we monitor are calling for mid to high single digit starts growth in 25 versus 24. Maybe as some of these apartments finish up, that's going to help them get to the high end of that range. But that's what we're building. That's what we're modeling for right now. Is we do expect some growth into 25 versus 24 from a single family starts perspective.
Jay, you mentioned R&R, and I know what stock were you referring to on that? We had a question
Yeah,
in
on
the
repair and
chat.
remodel. Yeah. If you look at the two product names that we brought up, BLDR gets about 75% of their revenues from single family construction. And then the other 25% is a mix of residential repair and remodel and multifamily construction. And then UFPI, they get about a third of their revenues from single family and then about a third from R&R. So if you have a conviction level around R&R spending in 25 versus 24, UFPI is going to have a little bit more exposure there and may benefit more from that trend than what BLDR might see.
Any comments on Redfin, or Zillow?
Yeah, we upgraded Zillow, I want to say a month ago now, and the premise there is pretty simple. We think with the software, they bought $10 billion worth of software over the last, I think, 8 years. They're finally turning that software on now. It's adding to revenues. It's helping them grow faster than the underlying existing home market. So we think that one, I think my price target on that one's $80 right now. That's a name we would be buying at this point. And I think also as Zillow continues to expand, not only in existing home transactions, but new home transactions is a market focus for them. That's timely because new homes have been gaining market share versus resale. So yeah, we like Zillow a lot. We'd be buying that one here. Redfin, still neutral on that one because I think at the core business for both of them, real estate transactions, Redfin probably sees the same level of growth that Zillow does, but Redfin doesn't have all these software packages like Showing Time, Listing Time Showcase, Follow Up Boss, all these things that Zillow's bought that give it ancillary sources of revenue when you see existing home sales. I think the existing home sales this year are the lowest they've been since 1985. So Zillow has those extra sources of revenue. Redfin really doesn't at this point. So we're much more positive on Zillow and neutral on Redfin at these levels.
Do you have a sell rating on anything?
Not anymore. With us upgrading Meritage and Horton yesterday, those were our last two sell ratings. So we're neutral to outperform on everything at this point.
Before I let you go, how about things that you can't really factor into your analysis, like hurricanes? So on a regional basis, are any companies that you think may be hurt from the recent hurricanes or benefit from the reconstruction down in Florida and all the way up the East Coast?
Yep. I would say if their FEMA needs to order some temporary housing like we saw after Hurricane Katrina, that could potentially benefit the manufactured housing names. Cavco, we're outperform rated on that name. Legacy Housing, LEGH, we're outperform rated on that one. We have not seen, we've been watching for signs of it from FEMA and from the feds. We haven't seen any signs yet that they are going to order additional houses. But if that does happen, if they have to do a larger housing restock like we saw after Katrina and Wilma, I think the MH names could benefit from that. What I think you're actually going to hear when the stick builders start their conference calls is there's probably some units that got pushed because of Helene hitting right at the end of the quarter. But in terms of the longer term play, if FEMA decides they need to order some more houses, I think the manufactured housing names are the ones to look at.
We've been on the line with Jay McCanless covering the home builders over there at Wedbush Securities, maintaining a bullish outlook on the sector. And Jay, we always appreciate having you on the show, and we'll be dialing you up again real soon.
Great. Thanks, everyone. Have a good day.
Thank you, Jay. All right, Jay McCanless from Wedbush. Looks like he's faring better than his brother, Chris McCanless. I don't know if anyone's going to get that reference in the chat.
Who's that?
Chris McCanless was. Well, I'll see if the chat gets it real quick. I'll tell you in a second, though. I just want to see if anyone gets it.
Come on, chat. Come on.
All right, we're going to go to, we had someone ask for an earnings stock here in the chat, so let us know. We got about 10 minutes left, so let's go over to PLD, which reported earnings this morning. Let me get those numbers pulled up real quick. I'll tell you now, Jill, Chris McCanless was the subject in a book called Into the Wild, about a guy who went up to Alaska and then ate some berries that were poisonous and passed away. So Prologis reported EPS of $1.43, beat the $1.37 estimate. Sales came in at $1.9 billion, missed the $1.95 billion estimate. So you're seeing, okay, looks like the guidance was upgraded a tiny bit, and you're seeing the stock up about 1.5%. I don't really follow this stock too closely, but up slightly on the earnings report.
All right. I'm going to make this bottom right chart big here. What are you looking at? What are you seeing? You know my methods.
Wait, on which chart?
The PL. I just made the PLD, the monthly bigger.
Okay. Looks like we got 1, 2, 3 bottoms there at $100.
Yeah. And then what about the upside?
On the upside, around 140. Looks like you got topped out a couple different times.
Yeah. And we're smack dab in the middle. So right here. So I don't have much of an opinion. You've been in a trading range here since early in 2022. You're kind of in the middle of the trading range. So if we get up closer to 140, I'd probably be looking to trim. If it came back closer to 100, that doesn't help you much for today. But you did have a big decline from this 132 area, 132.57. So you are getting some money back. I would say if you're looking for a target today, I see a lot of congestion in the 126, 127 area, multiple highs going back to late September. So if you're looking for a target on the upside, there you go, a little bit more shorter term. Longer term, if you happen to go into retreat mode, nowhere near, or for now, we're nowhere near yesterday's low and close. 120.74 and 120.39. That was the mark.
All right, got a couple minutes left here. We've got a few other subjects. So we've talked a lot about China the past couple weeks. Obviously, you had that violent rally to the upside, and then almost just as violent of a sell-off. And it's kind of hard to gauge, the stimulus, what's going on with the economy over there. But what we can do is look at actual earnings. And LVMH, which of course is the luxury conglomerate that owns Louis Vuitton and a bunch of other luxury brands, reported earnings. I don't know when the earnings came in, last night or this morning, but the stock is getting hammered down 7.5%, and the company is citing weaker performance in China. So when you have actual companies like LVMH come out and say sales are weaker in China, that gives us more insight into how the actual economy is doing in China. And LVMH, again, getting hammered down 7.5%, $53 here today on this weakness from China.
Boom. I have LVMHF, and it's like around 640. So I'm not sure what we're equating here. Do I have the right thing?
Yeah, down it's down $53 from yesterday.
Okay. Boom. I mean, I don't follow the stock. We don't have the price action in the pre-market because it's OTC. I mean, I can't see any major support until, you're sub 600 here. That's a ways away. I'll just give you your next monthly low. This thing is thin too. Your next monthly low would be 605.90. That was your low almost 2 years ago. So that's what I'd be looking at it in that one, not widely followed. As far as China goes, I mean, it's so hard really to talk technically about this because of all the gaps and everything. But you're trying to find some support here in this area. Maybe the FXI is not quite as gappy. No, they're gappy. I guess maybe figure a retracement on some of these moves. But of course, you're all dependent on the next headline for these stocks.
All right, let's bring it back to the States here. So yesterday we talked about ASML's impact on the overall market. You look at the Qs closed down more than 1%. You look at SPY closed down 0.8%. Yet there were pockets of strength, and Apple was a stock that closed up more than 1% yesterday. And I asked this as like a quiz question to Joel. How many days out of the year do you think the Qs are going to close down more than 1%, but Apple is going to close up more than 1%? We know Apple is still one of, if not the biggest weighting in the S&P 500 and the Qs. So to see Apple strong on a day where the market was weak was definitely interesting yesterday. And Apple hit new all-time highs. So
Mhm.
we pointed it out in the show yesterday that Apple was showing some strength. Looks like you have some people taking a little bit of profits here. Apple got all the way up to 237. Actually, big time profit taking, going from 237 down to 233 here. Dropped about $4 here. So, Joel, give us the read on the Apple technicals.
I mean, you called it yesterday, and it was only trading like 233, 234, and I'm like, hey, maybe you get a look at that all-time high. Buyers came in force, and you got a double top here, 237.23. That was your high back on July 15th. Boom, made a high at 237.49. Now you've backed off that level, so major resistance. Of course, ASML knocked it off its keister, being a big stock in the S&P. So tough call here. I'd like to see Apple for Apple shareholders. You have almost a $4 gap between Monday's low and Tuesday's low. So maybe find an area of support, create 2, 3 lows, maybe at the 230 area, 231. I'm just throwing numbers out there at you. And then build another base in order to make another push up to that all-time high. But nice call by you yesterday. I did not think it did it right, blasted right off the open, and then boom, it faded just around 10:30, just like the remainder of the market.
All right, and then we've got a couple minutes left going to talk some nuclear here. So Amazon leads a $500 million funding round for X Energy to develop small modular reactors, which are SMRs, nuclear power technology. So it's kind of one of those things where like the ball got moving, and now it's kind of snowballing here where other tech companies, you saw Microsoft or Google do a deal with what is it, Constellation Energy for a small modular reactor, and now other tech companies are, because they're all looking for efficient, clean energy ways to power these data centers. We know that AI takes a lot of energy, so you're seeing some nuclear stocks moving on this news. There is a ticker SMR, which is New Scale Power, up 10%. Obviously, with the ticker SMR, they do small modular reactors. Then OKLO, which we talked about with Jay Woods a couple weeks ago, which is a Sam Altman-backed former SPAC. That is up another 10% this morning, too, after closing up 16% yesterday. So nuclear energy sector heating up, no pun intended.
Boy, oh boy, the Oklo got things, well, CG and then VST. I mean, don't fight these things. This Oklo, look at that, tacking on another $1.26 today. I could say, well, it's going to take a while for all these things to filter through and reflect the earnings, but who cares, man? You got the price action now. So for Oklo, you can keep it just making new highs in the pre-market. You're into this big red bar, so you're in no man's land. You said SMR, boom. That's moving up here, 14.95. You just have pesky highs here if you're looking for potential targets. One at 15.25. Looks like you briefly touched that. And then you could do your homework on your own, 15.25. And then, wow, things open up to 16.15. But you got a lot of momentum there. I know we only got a minute left, but we didn't get the chance to do much ratings here. But let's talk about the Cisco kid here, trading over $55.
Yeah, so Cisco got an upgrade from Bank of America. Let's see. And also Citigroup upgrades Cisco systems to buy, raises price target to $62. That came in just a few minutes ago, Joel. I don't have the actual number here on Bank of America. We have Tigris Financial yesterday maintains buy on Cisco, raises price target to $78. So kind of a slew of positive analyst coverage here. Between Bank of America, Tigris, and Citigroup, all in on Cisco, and the stock is trading higher by about 2%.
Big old move here on 250,000 shares, which is not very much. So Cisco traded 137 million yesterday. Not going to try and pick a top here based on the pre-market high. I just thought we'll throw a trick in here for the open. It kind of worked yesterday. And Walgreens Boots Alliance, you know what? That thing, it had the good news, right? And it opened up. boom, opened up at the low of the day, 960. I know it was trading higher in the pre-market, over $10, but the paper, the doubters kind of held it down on the open. So maybe for the Cisco kid here, you maybe try and pick, get a low ball bid in there. Maybe you get filled on it. The top of yesterday's range, it's 54.61. Doubt that you're going to get filled there. Nothing on the monthlies here for Cisco. I've been riding this thing for I don't know how many years here, and came back nicely. 48, nice move here for Cisco.
All right, well, that takes us to 9:01 a.m. Shout out to Jim Tassoni from Armor Wealth Strategies for hopping on and guest hosting with us today. Shout out to Jay McCanless from Wedbush Securities for hopping on with us today to talk some home builders and the real estate market. Joel, oh, you already told us who we have coming on tomorrow. It's Frank Holmes from U.S. Global ETFs. Is that what it's called?
Yep. Jets, Jets, Jets. He'll be covering that, and we'll also have another special guest host tomorrow. You guys are all familiar with him, but I'll keep it a secret. Great job, Aaron. Way to keep the flow going. We didn't talk Tesla. So all you people have been talking about Tesla. We didn't cover it today. We're not going to cover it tomorrow. Maybe not even on Friday, unless there's news, and there always is.
We only talked about how we didn't talk about Tesla.
That's right.
All right, guys, thank you to everyone who tuned in with us today. We do have live trading starting up after this. I will actually be on live trading for a little bit for the rest of the week. So if you guys want to hang out there, make sure to join us. Smash the like if you haven't already. Otherwise, we will see you guys 8 a.m. tomorrow morning.